Bitcoin experienced a sharp decline over the past week and reached a price floor around 60k. It is currently in a recovery phase and trying to catch its breath. Today, let's take a look at whether we actually reached the bottom or not. Hey everyone, thank you for jumping back into the Crypto Ods. Please give the video a thumbs up and subscribe to the channel. We have reached very critical price level over the past 15 years. We have never seen Bitcoin trade above the high of its previous cycle. Many people believe that we should stop around 64k and that the price must reverse there at the 64k here. We should not be able to break below this level, the 64k. Based on historical patterns, this has always repeated. Let's examine the reasons why we might actually price even lower levels than this, and why, if there is a price rebound from this area, it could turn into the bull trap designed to hunt retail traders. If you look at the chart, there is a long-term trend line that has supported price since 2013, but this time the trend line has broken after 12 years, and our 20 weeks moving average sits around 50 to 52k, like here. And historically, Bitcoin has always formed its price bottom on the 20 weeks moving average. Here, you can see, or slightly below it, like last cycle. We go below the 20 weeks moving average. But right now, price is trending much closer to this area I've marked here, like here. We are similarly, historically here, like last cycle. Let's dig deeper and analyze this form on an on-chain perspective and examine the data behind this move. Before getting into the on-chain data, it's better to take a look at the ETF flows. The data very clearly shows extremely heavy outflows over the past week. Only on February 2nd, we saw an inflow of $560 million, which was notable on the remaining days. However, we recorded average daily outflow of $500 to $700 million, which is frankly disastrous. And the Coinbase premium has remained negative for several consecutive months. And US investors are showing no real appetite for investing in the crypto market. And on-chain data indicate a clear absence of retail participants. Before the recent sell-off, when we dropped from 100k to 80k, some retail traders were entering the market, while large investors, you can see here, large investors were distributing, but on the other hand, the retails entered the market. However, at that moment, large players are exiting and there is no retail left to step in and buy. This may be due to widespread uncertainty among investors and expectations of a major economy recession, which has pushed both retail and institutional investors to exit risk on markets. I have two articles. Before conclusion, these two articles, first of all, I read them for you. The first one said institutional investors are aggressively unloaded US securities. Hedge funds sold US single stocks at the fastest rate since October on the Wednesday, posting their second consecutive daily sale. This was driven by short sales and to a lesser extent by liquidating long positions. This also marks the fifth day of net outflows over the last 6. 5 of 11 sectors experienced liquidation, led by information technology, industrials, and materials. The second one said, investors are rushing to the consumer staples at the record pace. Individual and professional investors bought 702 million in consumer staple stocks and ETFs last week, posting the fourth consecutive weekly inflow. Over the last 4 weeks, consumer staples have attracted 3.6 billion in inflows. As a result, the 4 weeks average of a purchase rose to 915 million, the highest since data began in 2008. This is the 17 times higher than the 12 weeks average of 55 million. Furthermore, the 4-week average of net flows as a percentage of market cap is up to 0.03%, and an all-time high. According to that 2 articles I read, the conclusion we can draw is that investors are reducing their risk exposure. They are selling and exciting AI and technology stocks and rotating into the lower risk consumer stocks, such as pharmaceutical and food companies. The reasoning is that in tough economic conditions, people are still forced to meet their basic needs. So, these sectors tend to be more resilient. It seems investors are sensing that the economic conditions may worsen. From my perspective, these are clear signs of approaching recession. Let's cut to the chase. Whenever we break below the blue line, that's line, on the on-chain original price model, we officially enter a bear market, and price tends to stay below this line for an extended period. A time-based bottom usually forms once we reach the lower zones, especially where the red line, like here, and slowly it starts to shape the bottoms at this area, the red lines. On the other hand, our MVRVZ score has not yet reached 0, which is typically required to form a market bottom. Historically, every time the MVRVZ score has reached 0, Bitcoin has formed its bottom at those levels. We are still some distance away from this point, from the 0. Even if we get a pullback from here, from 60k to 80 to 84k, because some people said we have an CME gap at this level. You can see we have the CME gap from 78k to 82k, 83k, like that. There is a hope that price could move higher to fill that gap, but that alone wouldn't signal a true reversal if we are fill that gap. If you look at the on-chain value destroy indicators, we are positioned almost exactly where we were in January 2022. Like here, you can see. After that, we got a bull trap, and then market start to goes down again. Right now, we are here in January 2026. Another time, we got the same pattern. We got the sign of the reversal, a bull trap once here. Once again, we are at the similar point where a recovery signal appears, which could lead to another bull trap, and then renewed price decline. My expectation is that this time we will see the market bottom earlier than a previous cycle. We could see the market bottom around May. During the summer, I expect the market to be relatively low volatility and range bound, with a potential price recovery starting around October. If you enjoyed this video, subscribe to this channel and hit the like button.